This is going to be India's decade. That is the hypothesis that Morgan Stanley sets out in its blue paper. It says that India is set to become the world's third largest economy by 2031 and also the third biggest stock market before the next decade. Well, to take us through the assumptions made, the projections and the forecasts put forward in this research paper, joining us now is Ridham Desai, Head of India Equity Research and India Equity Strategist at Morgan Stanley. There are several factors, several reasons why Morgan Stanley believes that this is going to be India's decade for the taking. Chief among them are the fact that we are, of course, going to enjoy the demographic dividend, the demographic advantage, which, of course, has been something that we've been talking about. The other trends are, of course, decarbonization, deglobalization, and digitalization. So those 4 Ds is what Morgan Stanley believes will be the pillars on which the Indian economy is poised to grow and, in their words, see a seminal shift over the next decade. Let me just take you through some of the key assumptions that Morgan Stanley is putting forward in its report. Morgan Stanley believes that India's GDP is likely to surpass $7.5 trillion by 2031. That is more than double the current levels, making it the third largest economy, and add about $500 billion per annum on an incremental basis over the decade. Joining me now to talk about why he believes that this is India's decade for the taking is Ridham Desai of Morgan Stanley. Ridham, many thanks for joining us here on The Record. Always a pleasure. Appreciate you joining us. You know, over the last 12 months and more importantly, over the last few months, I've had several conversations with CEOs, both global and domestic, who believe that this is not just India's decade, but perhaps could even be India's century. I won't go as far as that. Let's stick with India's decade for the taking. Just 24 hours ago, the CEO of HSBC India, Hitendra Dave, said that this is our decade to use or lose. You believe that this is going to be our decade to use, Ridham. Let's understand from you what makes you as bullish as you are this time around.
Hey, Shereen, thank you so much for having me. So I call this, it's a quintessential self-help story. India is helping itself probably dominate the world. It's already hazardous to forecast a decade, so I wouldn't go beyond that. But I think India has done a lot of heavy lifting over the past few years, especially over the last 4 or 5 years. And we did get interrupted by COVID, but we're now coming out of that, and all the labor that we put in terms of policy and other things are now bearing, I think, fruit. There are also a few things happening globally that are helping us. So it seems like a sweet spot for India. In fact, as we highlight in the report, stunningly, India could account for 20% of the growth that the world will generate over the next 10 years. So it's a very, very big shift. India has grown quite well over the past few years, but its share in the global economy is changing in a very dramatic fashion. In fact, as you mentioned, 3.5 trillion going to over 7.5 trillion, which means to date, over 100 years, we've added $3.5 trillion to our GDP. In the next 10 years, we'll add more than that. So imagine what that change is going to bring about. So lots of things happening. If I were to summarize it, I think there are 3 big pillars to these shifts that are taking place. One is offshoring, which is essentially India is becoming the office to the world and incrementally the factory to the world. So we're kind of benefiting from what the Morgan Stanley view is the multipolar world thesis. We're moving away from a bipolar world, which is dominated by the US and China. And India is eating away into China's share of manufacturing, helped by the government's production-linked incentive schemes, as well as the corporate tax cuts that happened in 2019. We have a proprietary MNC sentiment indicator, which is at all-time highs. And it's at all-time highs even relative to China. So, just concurring with your conversations with MNCs, even on a quantitative basis, it seems like several boards across the world are all prepped up to invest in India. And office to the world is a theme that has actually emerged post-COVID. So it's a silver lining to what was a pretty big human disaster, that CEOs suddenly learned that working from home is okay. And if you're working from home, you might as well work from Mumbai. It's a whole lot cheaper than working from Florida. And that is why jobs are being shipped into India. So offshoring is one big theme. The second big theme is India Stack. I loosely call it India's version of grid, with the difference that it's actually a public utility. So anybody, you, I, a corporate, a telewala can build an API on top of it and deliver services to consumers. And the third big change is the energy thing. We have managed to provide access to over 600,000 villages in terms of electricity, and that's going to lead to a big change in energy consumption. Just for the statistic here, India currently consumes 800 watts per person per day. The comparison with the US is the US does 9,000 watts. Now, 800 in our view is going up to 1450. And the big story here is that bulk of this will come from renewable sources. So the age-old problem that India had when oil prices went up, our macro always had a problem. That problem will wane in the future. So a lot of changes happening. And this is what makes us very bullish on India. And if you'll notice that most of these are India-led changes. We are making these changes to our macro, to our economic systems.
I'm glad that you ended on that comment, Ridham, because you preempted my question in many ways, because you started by saying that this is a quintessential India self-help story. And what I wanted to delve a little deeper with you was how much of what you're projecting is based on the moves that India itself is making, i.e. what India is getting right, versus what the world is getting wrong at this point in time.
So actually, I think 3 out of 4 are India related. The fact that we are a signatory to the Paris Accord, that's an India initiative, that we're committed to net zero, that we've got major renewable plans set up for the next 10 years. I think the Prime Minister has mentioned this many, many times, 500 gigawatts. We may or may not get to that exact number, but that's going to completely alter our energy supply chains. So that's all India related. The second India related thing is Aadhaar and India Stack. Nandan Nilekani, when he framed this 10 or 12 years ago, nobody thought it would be so potent as it is now appearing to be. It has revolutionized the way India invests, the way India makes payments, the way India stores documents. It's now going to change the way India spends money. It's going to change the way India lends money, and it's going to change the way India insures. So major changes. These are all idiosyncratic. Nobody else in the world has got this system. And the third big change which India is engineering is with respect to its policy. We made those choices in 2019. We decided that corporate tax rates need to be lower. We decided that we want to incentivize capex. We put out production-linked incentive schemes and a slew of other things that the government has done in order to boost the investment environment. So these three are India-related. The only thing that's coming from outside is the shifts in geopolitics and the shifts in what was a bipolar world, and that's happening because of China plus one or Europe plus one. So that we don't control, but 3 out of the 4 factors that are driving this are India.
Well, speaking of India, Ridham, and I know that a lot of people are going to be wanting to hear what you have to say as far as the stock market story is concerned. So let me get you to delve a little deeper on that. In the report, you talk about a quintupling of stock market investors from the current 62 million up to about 300 million. And that, in a way, captures the mood across equity markets and the momentum that's been built around the equity culture. Why talk about the decade? Let's get you to talk about when you believe we're going to be at the all-time highs. The expectation is anytime soon.
Yeah, Shereen, actually, I hate to go into these all-time high things, but yeah, we are not very far away. I think it depends on what the US markets do. Even though we have kind of decoupled, as we have seen over the past several months, the fact is that the US is still the largest stock market in the world, and it seems to be forming a bottom. If it does form a durable bottom, then I think we will make a new high. That's still to be seen. It's not our central case because the US is still struggling with inflation and with earnings. Very unlike India. India is not struggling with these things. So that's why India has done so well. I mean, just digest this number. This year, India has outperformed emerging markets by 34 percentage points. It's not happened ever before, this type of outperformance. it's really a very, very broken denominator. Emerging markets around the world are really broken. And India is therefore looking so good on a relative basis. But on an absolute basis, the market has not really gone anywhere. We've been digesting, the earnings. We've been digesting what was a relatively high P ratio, and things are, settling down. So it's been a typical consolidation, very, I would say, very benign consolidation. It could have been a far more volatile consolidation, but it's been a benign one. So I think we're prepping it up. I think 2023 looks like it will be a much better year for absolute returns. So yeah, let's look forward to that, and hopefully we can make a new high soon.
Yes, that is the expectation, and that certainly is the hope at this point in time. But, you talked about the benign consolidation, Ridham, and while you've just outlined your bull case for India over the next decade, as far as the markets are concerned, outside of the external factors like what the Fed is likely to do, and we will know later tonight, but what could be the near-term triggers as far as our markets are concerned?
I think one of the things that, again, as I said, the near-term triggers are probably lying in the U.S. rather than in India. So one thing we need the Fed to articulate that they think inflation is peaking, which is what I think is happening in the U.S. And if they think that inflation is peaking, then a lot of the bond market losses in the U.S. will start reversing, and that will then feed itself into the equity markets. The next thing, of course, is what happens to US earnings, which will probably be quite bad over the next several months. Back in India, I think we'll focus on the earnings season. I think the earnings season is going to be one trigger to watch out for. We have our own central bank, which has still a little bit of way to go before rates stabilize. So that's another thing that we'll be looking at. I'll be looking closely at commodity prices as well, because it doesn't look like the Russia-Ukraine war is yet settled, and it may be a source of bad news. So we have to keep an eye on that. Fertilizer subsidies in India have gone up significantly this year, and the underlying assumption is this will roll back next year. So keep an eye on that. Ammonia plants across Europe have been shutting down because gas prices are too rich. So we need to see those things come back and fertilizer prices to settle lower. That'll be good for our macro. And then, of course, we'll watch for how investments shape up. Because, Shireen, at the end of the day, to get a durable earnings cycle, which is what we are forecasting for India, needs a lot higher investment rate. And it requires corporate optimism. Now, I'm sensing that companies in India are getting more optimistic. They are starting to run into some capacity constraints. And therefore, there should be a pretty good capex cycle in the next 2-3 years. And that will be great for earnings. So that's something that we'll watch out for as well.
Yeah, and that wait has been on for a while now, Ridham, in terms of the private capex cycle turning, and it currently continues to still be the government that is driving capex. So we will have to wait to see, as you point out, perhaps over the next 2 to 3 years. But I want to focus a little bit on the manufacturing story, because that is something that you feel particularly confident about. We were stuck for over a decade, at about that 11 to 12% percentage of GDP as far as manufacturing share is concerned. Currently at about 15%. You believe that we have the potential and the ability to go to about 20% over the next decade, in light of the many factors that you've just spoken of, including, of course, the multipolar thesis playing itself out in the China plus one advantage being enjoyed by us. How confident do you feel of being able to break out of this manufacturing range that we've been stuck in for over a decade plus?
Actually, Shireen, manufacturing share in GDP has been declining for 3 decades now. So it's not just the last 10 years. In fact, it's ironical that in 1991, what was dismantled was all the constraints on the industrial sector. All the reforms surrounded the industrial sector, whether it was relating to pricing, capacity approvals, supply of resources, etc. Ironically, it's the share of the industrial sector that actually declined. I think there were many constraints on the ground. And, we used to joke about this several years ago, that it was cheaper to import steel from Russia than bring it from Jharkhand to Mumbai. And that was, the basis of the problem, which is that we just didn't have a competitive logistics cost. Now, I think that has gone through a big change over the last few years. Infrastructure has been put in place. There's a huge focus on logistics, and therefore it has become more competitive. Of course, there are constraints in China as well, which is feeding into this story. But I think India is set to now become a meaningful part of the global supply chain. And a lot of companies will reveal this to you that they're receiving orders. Hitherto, they didn't have access to those orders because Chinese companies used to take those orders, and they are now all set to increase capacity to service these export orders. On top of this, multinational companies are looking at India as a very attractive destination. A, to obviously put up low cost manufacturing. Our labor costs are less than China now. That wasn't the case 10 years ago or even 5 years ago. So now we're lower than China. And B, because we have a serviceable home market. Look at mobile phones. We are very big consumers of mobile phones. So it makes a lot of commercial sense to set up capacity in India, service that market, and then take the excess production and put it out of India. So I see this. These are the changes which inspire us to believe that manufacturing is now set to gain share in GDP over the next 10 years.
Ridham, we are going to take a break, but don't go anywhere. We return with Morgan Stanley's Ridham Desai on why he believes this is going to be India's decade. Welcome back. You're watching On the Record with me, Shereen Bhan, and I'm in conversation with Morgan Stanley's Ridham Desai on their blue paper on why they believe this is going to be India's decade. You're also very bullish on the consumption story, Ridham, and you believe that we are going to see a significant, in fact, a seminal shift as far as discretionary spending is concerned. Build that case out for me a little bit. What could be the triggers that move the per capita as well as bring about this major shift that you are talking about as far as discretionary spends are concerned?
So, Shireen, that I think is the most important part of this story. The pyramid in India, the income pyramid, is set to invert. So we have a lot of people sitting at the bottom of the pyramid who are extremely poor, and they're going to move up the pyramid. And at the top of the pyramid, we're going to get some, major change. So currently, for example, the households in India that earn in excess of 35,000 US dollars a year is about 5 million. Based on our forecast of where we see GDP going and where we see the population going, this number is likely to go to 25 million by the time we get to early 2030. So that's a five-fold increase in the number of people who can buy Louis Vuitton purses. I mean, you look at that. Louis Vuitton's global brand ambassador is now Deepika Padukone. And I think they're sensing this. They're sensing that their big market is going to be India. This is what happened to China, 15 or 17 years ago. China was the biggest consumer of luxury goods. That's at the top end of the market. At the bottom end, as people rise out of that very low income levels, they suddenly find room to spend on everything that is not staple, which is, forget roti, kapda, makan. These are the three staple things. Even painting a home in India is discretionary. Sending your kids to school is discretionary. Buying a internet connection is discretionary. So a lot of that money will get spared up to do this. And this is basically the natural transition that's happening as we move from the $2,000 per capita to $5,000. And it's embedded in our GDP forecast. It's being driven by the fact that India is becoming the office to the world, is becoming the factory to the world, and is also being driven by the fact that energy consumption is set to rise. So all the factors that I mentioned earlier are driving this big consumption story. I think discretionary consumption will surprise on the upside in the coming 10 years. And a lot of subsectors will surprise us quite meaningfully because we've not seen that happen before. Things like travel, things like education, things, home effects. These are all likely to see major increases in spends. Even buying of residential homes, because, we've been in a 10-year bear market as far as home purchases is concerned. That's also breaking out now. So lots of things changing on the ground in India. Again, goes back to the point I made at the start. It's a quintessentially self-help story.
Well, you know, Louis Vuitton bringing Deepika Padukone on board as a brand ambassador. You know, maybe they know something that that you're forecasting, Rhythm, and I hope that we actually do see the bottom of the pyramid also being able to move up in terms of spends, because at this point in time, and that's what I wanted to get your view on, inflation is biting at the lower end currently, and that's being reflected by FMCG sales, two-wheeler sales at the bottom end of the market. What do you make of how this is going to play out, at least in the near term, with inflation where it is currently?
Actually, Shereen, I think inflation put its absolute peak in April. So I don't think we're going back to those levels. The only caveat here is that we don't get any major flare-up in commodity prices because something goes wrong in Eastern Europe. But you know, keeping that aside, I think inflation is likely to be much lower in 6 or 12 months from now. And I think the RBI has already done bulk of the heavy lifting to bring real rates back into positive territory. So if I make a 1-year forward projection, I think real rates are probably already in positive territory, which is good. And therefore, the pain that we are seeing at the lower end of the pyramid also has, I think, troughed, or rather peaked. And we actually put out a separate report a couple of weeks ago, which said that the rural economy is about to turn as well. So that's exactly the bottom end of the pyramid. And I think they're going to see much better days in the next 3-4 months. So I'm actually quite optimistic about it. That's the short-term view. Longer term, I think the bottom of the pyramid will benefit the most. And I'll actually bring in one more thing, which is not contained in our report, but we've talked about this separately, is that this is linked to the success of social distribution. You see, until 2014, when we didn't have the Aadhaar system set up, social distribution in this country was done largely through the ration system and through government offices, which involved handwritten ledgers and was mired by a lot of corruption. I'd done a rough calculation that in the preceding 30 years, we had transferred $500 billion of taxpayers' money to poor people in India. And it didn't seem to have any effect because, you know, people were really not walking out of poverty. In the last 8 years, there's been such a seminal shift because of Aadhaar and because of DBT, direct benefits transfer. A lot of that money, I would dare say 99.8% of the money that is being distributed is going to the intended beneficiary. This is creating a huge change at the bottom of the pyramid. It actually explains the success, the political success of the BJP, I think. In large part is to do with the fact that social distribution is now working, which it didn't in the past, and it's down to this amazing technology that we have in this country, which is again, as I said, unique. And now we're building other layers on top of this. So I'm very optimistic with what India Stack will do. It will, for example, we didn't touch upon this, but OCEN, which is OCEN, Open Credit Enable Network, will allow credit to be disseminated to a much wider, population, and at a much lower cost than ever before. And that will then give the telewala who's sitting outside the Taj and frying bhajiyas access to credit. He doesn't have that today. He can convert his cart into a shop with bank credit. That's the power of Open. And ONDC is a platform that will allow all these small merchants to onboard. It's another revolutionary shift that is going to happen. No other country is witnessing these things. So that's all dovetailing into the view that we have, because I'm fairly optimistic that these new stacks will prove to be very successful, as some of the older ones like FASTag. I don't think people understand how successful FASTag has been. It's a stack on the India stack, or for that matter, the Aadhaar-enabled payment system, or even Bharat Bill payment system, GST. All these are stacks sitting there. And just imagine how good we have been at delivering these things to the people. So that is something that we should note. The bottom of the end of the pyramid will be the biggest beneficiary of what's happening in India over the next few years.
You know, Ridham, of the 4Ds that you've identified as the pillars for this decadal growth story, I would completely agree with you. I think the digitalization story is very real. It's playing out as we speak, and that really has the potential to drive the kind of significant changes that you've just spoken of. But, you know, what is all of this going to mean, Ridham, as far as sectors or themes in the market to watch out for? You gave us some examples of what you're going to be looking at and the kind of recovery that we've, for instance, seen in the real estate stock, or the kind of opportunities that open up in some of the consumption subsectors that you listed out for us. But, you know, defense, healthcare, in light of the many themes that you've just spoken of, from a market perspective, from a thematic and sectoral perspective, what will you be watching out for?
So, Shireen, first up has to be financials. Okay, credit to GDP is 57%. Corporate credit to GDP is 46%. Even if you adjust it for India's low per capita income, India is under-levered. It just doesn't have enough leverage on the balance sheet. And that's, I think, set to change. Oaken will allow greater credit dissemination. And one of the headline views that we have in this report is that credit to GDP will go from 57 to 100. That will drive a 17% compounding of loan growth. So just imagine what's going to happen to bank earnings in the next 10 years. Yes, Oaken is a disruptive technology, but it's also going to help the banks lend, in a better way. And then you top this up with, IBC. I think the chances are that the next NPL cycle will be less punitive than the previous one. Because IBC will allow banks to recover at a much better rate, and IBC has now settled down. A lot of that law has gone through a lot of testing. So banks or financial services is top of the pack. Consumer discretionary, I've already mentioned that. I think that's going to surprise on the upside. Make your choice. There are lots of discretionary companies that will do very well. I think you should watch out for technology. It is going through a rough patch right now because of the potential slowdown in the US. But I think digitalization that you mentioned is not just an India theme; it's a global theme. Companies are going to continue to spend to digitalize, and nobody in the world can deliver those solutions at the rate at which India does, both scale as well as price. And Indian companies will be at the forefront of delivering those solutions. So I think when we come out of this rough patch, which I think we may have already in terms of share prices, we may not have come out in terms of profits and revenues. I think the IT services companies could do well. And then industrials. You mentioned defense, that's part of industrials. We're going to see a major indigenization of defense spending. So Indian defense companies should do well. Industrials overall, because I'm quite bullish on capex, I think should do well. So, these are the 3 or 4 sectors that stand out in terms of benefiting from the new India that we talk about.
Ridham, finally, before I let you go, what could go wrong?
No, lots of things can go wrong. None of these forecasts are secure. There are a lot of uncertainties in the world. We could not have predicted COVID, for example. Who knows what's the next big crisis that's coming to the world. But we've tried to take a shot at that in this report. There are 4 or 5 things that we highlight. I think the first thing to bear in mind is that we have an election cycle coming up in a year and a half. I think that will be critical. It'll be important for the Indian electorate to put in another majority government. Yes, coalition governments do their work, but it always becomes a bit of a struggle, and economic agendas kind of take a back seat. So hopefully we don't get a negative surprise in the 2024 elections. The second thing we need to watch out for is global growth. It does look very tentative. In fact, it's quite possible that India does not have the tailwind that China had when global growth was averaging much higher than it is today. So we will be in a sluggish global growth environment, but we will not be able to tolerate multi-quarter recession, for example. At the end of the day, India exports 20% of its GDP. It's not a small number. And even though we are gaining share, and we didn't touch upon this, but let me just highlight this to you. We think that India's share in global exports will double in the next decade. So we will be able to withstand some slowdown in global growth, but if it's a deep and broad recession, then it will create pain. commodity prices, I mean, even while we are going to de-link from global energy cycles, that's work in progress. So in the interim, energy price cycles will hurt us. I think one domestic factor which I'm going to keep watching out for is the skilling of our labor. Uh, the type of investments that we are, envisaging in manufacturing and services means that our labor needs to be skilled a lot more. And hopefully we don't run into labor supply constraints. So that's something we'll keep a watch on. But I think we talked about the next India in 2014. I think we have now transitioned with this report, the new India. That transition is, I think, is pretty much there, notwithstanding these risk factors. But yeah, there will be some hiccups along the way. It's not going to be a linear, straight line move. It never is. But I think we should arrive, as I keep telling, my daughter, that by the time I'm gone, you will be living in the world's richest country. So let's hope that comes out to be true.
Well, no one needs to be gone for that aspiration to be fulfilled, and I hope that we will all be able to be here and enjoy that when it happens. Ridham Desai, always a pleasure. Many thanks for joining us here on The Record to take us through why you believe that this is going to be India's decade for the taking, risks and caveats aside. But thanks very much. Always a pleasure speaking with you. Appreciate your time. That's it then on this edition of On The Record. From all of us here, goodbye. Many thanks for watching.